Hello traders, Gary Wagner here. Just after 11:30 in Honolulu, 5:30 in New York. It is Monday, August 28th, 2017, and this is the Daily Report for Gold and Silver. Tremendous upside surge in the precious metals market. Gold breaking through $1,300 after two failed attempts so far this year, closing at a new record high on the year, closing up about $17.60 at $13.1550. Yes, $13.1550. Of course, we did send out a special trade alert yesterday. We recommended the initiation of a long position. Traders taking that call got in at $12.99, just below $1,300. I'm very, very pleased with that call. Silver also trading higher today, $17.44 on the close, up about 39 cents. Now, as I said in my opening letter, and we talked about in the commentary of today's show, it has not been about the US dollar that has been the cause of this upside surge today. When we looked at the Kitco Gold Index, what we saw was that a $20 move in the cash market was only due to $3.50 of US dollar weakness, and the remaining $16 was all predicated on buying. Dow Jones Industrial Average really unchanged, down 5 points, 21,808. NASDAQ up 17 at 6283, and the S&P at 2444 plus 1 on the day. Traders, wow, what a way to start the week. A dynamic upside move in gold, in silver, taking it to a new record high for the year of 2017. Currently trading up almost $18 at $13.1580. We can see this large spike on our daily chart. We certainly, with a vengeance, traders, took out that elusive mark that has been so difficult throughout the year, and that mark, of course, has been $1,300 an ounce, the highest price that we have traded to all year, this being our year marker 2017. We have now seen that the third time is the charm. We had two attempts in which the market traded to 1,300, only to dramatically sell off pretty much immediately and sell off to roughly $1,200, creating a dynamic trading range between these two spots. And because of that, we have finally seen a realistic breakout. And as we talked about throughout all of last week's show, we noticed that there was something different that was going on in the market. And the difference was that we were forming a base in which to take that price point out, rather than having a quick rise in the market as we had here, and then a subsequent quick fall. Quick rise, quick fall. We knew that we saw something different. Also, we talked about a pattern coined by Steve Nissan, which is called a scouting party, in which when you are at either a new high or new low, and traders are attempting to breach that point or trade below it, the bulls in this case will go and test the fortitude of the bears and scout to see what kind of strength and conviction there is in bearish sentiment and how quickly they'll bring it back down. And we got this scouting party last week. Of course, today's close dramatically above 1,300 is what is called a beachhead, and the beachhead has signaled that $1,300 is the new sheriff in town, so to speak. In other words, it is now a level of support as opposed to a level of resistance. Now, traders, if you recall from Friday's show, I was upset in that we had this dramatic range, and that range knocked out about 60 to 70% of our long players. First of all, I want to thank all of our subscribers that sent me an email so I could get an idea of what percentage had been stopped out and are awaiting the next signal, and what percentage were still long in the market. Because when it came to work on yesterday's trading activity, as I saw this market really begin to trade and flirt with 1,300, let's go ahead and pull up a intraday chart so we get a better idea of that. And what I was looking at was the fact that at the beginning of the day, the market was trading roughly at 1298, 1299. We actually put out a trade alert and trade recommendation when the market was at 1299 and change, just under 1300. Let me put our arrow up. So my feeling was I saw some momentum building right at this price point, and this is where we actually put out the signal. Traders taking the call got in roughly below 1300. That's the key. We're all in below 1300, whether you're still long from your position at 1283 or you got stopped out and took a small loss or a break even and got back in. All of us are now in at and below 1300. We had this initial spike that came in. Again, this is a half-hour candlestick chart, taking it to an intraday high just above 1304. And from there, it kind of traded sideways for the better part of the day. And then we had this dynamic move up in a span of 1 hour. We watched the market trade from just around 1302 to trade to about 1313, 1314 in that area, consolidate just for a little bit, and then spike higher. Now, this last red candle is our current activity. The intraday high, the highs that were achieved today, 317.80. Market's at 316 right now. And so we're just about $1 off the high, and we're now in what I believe is a consolidation period as the market adjusts to this new price. Traders, therefore, my recommendation is to maintain your current long position. And as far as the stop goes, we initially put the stop very, very loosely below 1280 to account for this spike that came in. In other words, I put it at the low of Friday's trading activity, and that's obviously going to be moved up. In terms of where we're going to move it, my sentiment is we've got consolidation in a couple of different areas, just below and just above 1300. So putting it at 1298 or below would be a good place for almost a loose stop at this point, and that's what I am looking at in terms of price point. Again, traders, maintain your current long position, and you can look to move your stop up to below 1300. My suggestion would be about 1296, but I will put out a special trade alert over the next 48 hours. And traders, in terms of what has caused this uptick in gold, it had very little to do with the falling US dollar. Yes, the dollar continues to trade under pressure. Yes, the dollar is down about 0.5% on the day, and it is actually traded to our mark. Finally, I've been calling for 92 for I don't know how long. Intraday low today is 92.11. I will say that it has effectively hit that point. I still believe we're going to see the dollar drift lower and drift as low as about 91. That is my new updated target. But you can see that even on this weekly chart, and this only being a day, we didn't have that strong of a move. When we looked at the Kitco Gold Index today, on a $20 uptick, $16 was accountable to trading or buying gold, whereas only $3.50 was attributable to a falling US dollar. Really, what it seems to be is a reaction to speeches made by Yellen and Draghi, both of them conveying a continuation of a loose monetary policy, cheap dollars, cheap euros. We had, of course, bid up in the euro. The euro has been very, very strong, and his statements, Draghi's statements, bid up the euro, put some pressure on the dollar. But more than that, it showed that the central banks of both Europe and the United States were going to continue to be accommodative in terms of their monetary policy, and that, traders, is bullish for gold. It means lower interest rates. Interest rates will maintain, meaning that people are buying physical gold. The carrying charges are costing them less. It also means that you do not have the type of environment where investments in interest rate sensitive vehicles are working well. Putting money in the bank is not going to yield that much. So gold has become an attractive area. Plus, you have all of this political turmoil in Washington, geopolitical tension going on around the world, North Korea firing off 3 missiles. And so all of that collectively is really what we saw move gold prices higher today. Traders, on Friday, we did get stopped out of a trade due to an increased level of volatility. And first, I do want to thank my subscribers for sending me the emails and letting me know whether they were long or short. I also want to welcome our new subscribers into the Gold Forecast, and hopefully you took the call yesterday as you initiated or became a subscriber on Friday and Saturday. We finally have the market moving over 1300. It has in fact formed what we've been talking about all week, that beachhead. My initial numbers, as you know, have been 1317 to 1321, and I believe that we could see the market consolidate in this area, but I still believe that there is more upside room left in this gold rally. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.